comes to investing, there are two main options: stocks and bonds. Both have unique benefits and drawbacks, so it can be challenging to decide which is the right option. This video will compare stocks and bonds and help you decide which is the best investment for you. What are stocks? In investing, stocks are shares of ownership in a company that you buy from the stock market. As the owner of these stocks, you have certain rights, such as voting on major decisions and receiving dividends when they are paid out. Stocks can be a good option for those who want to take on more risk to potentially earn higher returns. Types of stocks. There are several different types of stocks that investors can choose from, depending on their risk tolerance and investment goals. Common stocks are the most common type of stock and tend to have the highest risk and potential for greater returns. Preferred stocks offer a lower risk but also lower returns than common stocks. Blue chip stocks are stocks from well-established, highly profitable companies. These stocks typically have lower risk and steady returns on great stock prices, making them a good option for those who want more stability in their investments. Penny stocks, on the other hand, are stocks that are issued by small, low-profile companies. These stocks may offer high returns, but they also come with a much higher risk of losing money. How do I buy stocks? There are a number of different ways to buy stocks, depending on your individual preferences and the type of stocks you are looking for. Some common methods include stockbrokers. Working with a stockbroker is one of the most common ways to buy stocks, as these brokers can help you navigate the complex world of investing. However, this option can be expensive, as stockbrokers typically charge a commission for each trade. Online platforms. For those who prefer to do their own research and make their own decisions, online trading platforms are a popular choice. These platforms allow you to buy stocks directly from the company, often at lower fees than working with a stockbroker. Mutual funds. Mutual funds are a type of investment product that allows you to pool your money with other investors in order to purchase stocks or other assets. This option can be a good choice for those who don't have much experience investing and want the support of a professional team. Ultimately, the best way to buy stocks will depend on your individual preferences and investment goals. Whether you choose to work with a stockbroker, use an online trading platform, or invest in mutual funds, it is important to do your research and carefully consider all of your options before making any major investing decisions. Have you heard of technical analysis? It's a great tool that can help level up your trading and help you better understand the markets. If you are looking for a technical analysis tool, then we have the perfect one for you. Continue on to learn more. Affiliate disclaimer: Moovmynt is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps keep our website and its content. Learn more. Ready to take your trading up a notch? Check out TradingView. This platform provides all the tools and resources you need for success, no matter where you're at. From rookie traders just getting started to veteran investors optimizing their strategies. There's never been an easier or more effective way to reach those goals, so don't delay any longer. Check out TradingView today. To learn more about stocks, check out our previous video. What are bonds? Bonds, also known as fixed income securities, are debt investments in which an investor loans money to an entity, typically a company or government, in exchange for interest payments and the return on their original investment. Bonds typically offer lower returns than stocks, but they are also less risky and can be a good option for those who want to protect their initial investment. Types of bonds. There are several different types of bonds with varying bond prices that investors can choose from, depending on their risk tolerance and investment goals. Government bonds are issued by the government to raise money for projects such as infrastructure or defense. These bonds are generally considered to be low-risk investments, as they are backed by the full faith and credit of the government. Corporate bonds are issued by private companies, and they tend to offer higher returns but also carry more risk. Corporate bonds are generally a good option for those who are looking for greater returns and willing to accept some degree of risk. Municipal bonds are issued by local governments, such as cities or states, in order to raise money for public projects, such as schools or transportation. These bonds are an attractive option for investors, as they typically offer tax-exempt interest and low-risk returns. Bonds are a commonly used investment tool and can be a good choice for those who are looking for safety and stability in their portfolio. However, it is important to do your research and carefully consider all of the available options before making any major investing decisions. How do I buy bonds? There are a number of different ways to buy bonds, depending on your individual preferences, the type of bonds you are looking for, and the bond prices. Some common methods include brokerage firms. Working with a brokerage firm is one of the most common ways to buy stocks, as these firms can help you navigate the bond market and find investments that meet your specific needs. However, this option can be expensive, as brokerage firms typically charge a commission for each transaction. Online platforms. For those who prefer to do their own research and make their own investment decisions, online trading platforms are a popular choice for buying bonds. These platforms allow you to purchase bonds directly from the company, often at lower fees than working with a traditional broker. Mutual funds. For those who want the support and guidance of a professional investment team, mutual funds are an excellent option for buying bonds. Mutual funds allow you to pool your money with other investors in order to purchase stocks or other assets. While these funds typically require more initial capital than other options, they can be a good choice for investors who want the security of professional management. To learn more about bonds, check out our previous video. What's the difference between bonds and stocks? At a basic level, stocks and bonds are both types of investments that allow you to put your money into various assets and earn returns on those investments over time. However, there are some key differences between stocks and bonds that can impact which option is right for you. Stocks tend to offer greater potential for growth, but they are also riskier investments that can be impacted by a wide range of factors, such as market fluctuations and company performance. Bonds, on the other hand, tend to offer lower returns and less risk, making them a good choice for those who want to limit their exposure to potential losses. Overall, whether stocks or bonds are right for you depends on your individual investment goals and risk tolerance. If you are looking for strong returns and willing to take on some degree of risk, stocks may be the better choice. However, if you want to protect your initial investment and limit your exposure to potential losses, bonds may be a better option for you. What are the benefits of investing in stocks and bonds? There are a number of benefits to investing in stocks and bonds, including greater potential for growth. Stocks can offer higher returns over time than bonds, making them an attractive option for those who want to maximize their earning potential. Diversification. Investing in stocks or bonds allows you to diversify your portfolio, reducing your overall risk and protecting you from market fluctuations. Professional management. Bonds are often managed by professional investment teams, which can make it easier to avoid making costly investment mistakes and increase the chances of achieving your long-term financial goals. How to invest in stocks and bonds. If you are interested in investing in stocks and bonds, there are a number of steps that you can take to get started. The first step is to assess your goals and risk tolerance, as this will help you determine which types of stocks or bonds might be a good fit for your individual investing needs. Once you have done this, you can start researching different investment options, including online platforms, brokerage firms, and mutual funds. Next, you will need to open an investment account and start making regular contributions to your portfolio. This typically involves setting up automatic payments from a bank account and choosing the assets that you want to invest in. Finally, it is important to stay informed about current market conditions, as this can help you make more informed investment decisions and maximize your returns over time. Whether you are investing in stocks or bonds, it is important to do your research and take a strategic approach to build your portfolio. By following these steps, you can gain the knowledge and expertise needed to make smart investment decisions that will help you reach your financial goals. To learn more about investing, check out our previous video. Tips for beginner investors. When it comes to investing, stocks and bonds are two common investment options that can be confusing for beginner investors. With so many different factors to consider, such as risk, return, and time horizon, choosing the right one for your particular situation can seem overwhelming. Here are some tips to help you choose stocks versus bonds and decide which investment option is right for you. One of the first things to consider when choosing stocks or bonds is risk. Stocks are generally considered to be riskier than bonds, as stocks are subject to fluctuations in price, whereas bonds offer a fixed rate of return. Depending on your personal risk tolerance, stocks may not be the best investment option for you. Another factor to consider is the time horizon. Stocks are typically best suited to longer-term investments, as stocks can take years to see a significant return. On the other hand, bonds tend to be better suited for short or medium-term investments, as they generally offer more stable returns over shorter periods of time. Finally, it is important to consider your return expectations. Stocks tend to offer higher returns than bonds, but they also come with greater risk and volatility. If you are looking for stability and predictable returns, bonds might be the better choice. However, if you are willing to take on a little more risk in exchange for potentially higher returns, stocks may be the right option for you. Overall, when it comes to stocks and bonds, the best investment option for you will depend on your individual needs and risk tolerance. If you are a beginner investor looking to get started with investing, it is important to do your research and consult with a financial advisor before choosing stocks or bonds. With the right guidance and knowledge, you can make informed decisions that will set you up for success in the world of investing. Speaking of investing, have you invested in cryptocurrencies? If so, then you should look into getting a hardware wallet. A hardware wallet can help increase your security so that none of your cryptocurrencies are stolen or hacked. There are numerous options for hardware wallets, but there is one that we highly recommend. Affiliate disclaimer: Moovmynt is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps keep our website and its content. Learn more. Protect your cryptocurrency with the peace of mind that comes only from Ledger wallets. Their top-notch safety measures turn digital asset insecurity into a thing of the past, so don't gamble on security, go for total protection. Check out Ledger wallets today. Final thoughts. When deciding which investment vehicle to pursue, stocks and bonds offer two different paths with a variety of benefits and drawbacks. Stocks are more volatile than bonds and may offer higher returns but carry more risk. Bonds, on the other hand, are generally more stable and offer lower returns with less risk. It is important to recognize that stocks and bonds are not mutually exclusive and that an effective portfolio will often include both stocks and bonds to balance risk and return. At the end of the day, which investment vehicle you choose depends on your individual goals and risk tolerance. If you are looking for higher returns with more volatility, investing in the stock market may be the right choice for you. But if you are looking for more stability and lower returns, bonds are probably the better choice. Ultimately, the key is to find the investment that works best for your unique financial situation and long-term goals. Thank you for taking the time to watch this video. Good luck. Disclaimer: Moovmynt provides educational content only. It should not be taken as professional financial advice.